Mr. Aamar Singh of Angel One Broking. Thank you for joining us here on News 9, Mr. Singh. Always a pleasure speaking to you. Now, what do you think disappointed the street about the policy decision yesterday? A status quo was broadly expected. Was the market looking for some sort of a timeline as to when that next rate cut would come, which pretty much, did not come from Mr. Das?
Yeah, I would say that that definitely is one of the, I would say, factors. But more or less, markets are the way they are. They had anticipated that there isn't going to be a rate cut, because if you look at the inflationary data, retail inflation, that's 5.4%, and that's above the target rate. So that was, I think, ruled out. But in terms of the other numbers, in terms of some of the other GDP numbers which were there, so I think markets are looking at some sort of a consolidation happening. But the best part is that if you look at the markets from different perspective, you see that the public sector banks have been really outperforming. I would say SBI leading from the front, but it's the private sector banks which have not been performing. Earlier, it was the other way around. The private sector banks were performing, and the public sector banks, they were not performing to that an extent. So if you see,
actually, I wanted to get to you on that, because private banks yesterday fell 2%, PSU banks were up 2%. So why are we seeing such divergence in performance?
I would say, see, primarily if you look at private sector banks, HDFC Bank has not delivered at all over the last, I would say, couple of years, because the stock has been trading in a range. It seems that the upside is capped. Long-term charts also don't show any sort of a trend happening in a near term, and also the fundamental factors. Also, the story also is really not very enthusiastic for the investors. Having said that, the same can be seen with ICICI Bank also. So ICICI Bank is slightly better placed in that sense. But the private sector banks, we've seen some sort of selling. Now, what's happening in the public sector banks is that with the expectations that their treasury yields earnings would increase because of the fiscal deficit targets which the government has put in for FY25, which shows that the borrowings could. So that has really helped the public sector banks significantly. And you name the public sector banks, as you rightly said, they've clearly outperformed, outshone the private sector banks. And also, if I look at the private sector banks like ICICI Bank also, from a medium-term perspective, it clearly shows that there is more or less consolidation happening there. If I talk about Kotak Mahindra Bank, again, we are seeing similar sort of pattern there. So the pattern is very clear vis-a-vis the public sector banks and the private sector banks. And here the public sector banks are definitely far better placed in terms of the news flows and in terms of the technical charts from a long-term perspective as well.
I mean, sure, from in terms of news flows and perhaps technical charts also, but in terms of pure valuations, I mean, considering that we have not seen 1300 sort of levels on HDFC Bank, is that a attractive level for someone to make entry for a long term again?
Yeah. So looking at, you've rightly said that HDFC has got very strong support around the 1315, 1400 levels. Currently, it's around 1406. So if you look at, and the stock has corrected significantly from 1750 levels, it's corrected to 1400 levels, and where the markets are hitting record high. See, and HDFC Bank being the highest weighted, 13% weightage in Nifty. So that's very, very, I would say, something which really makes one to wonder as to what exactly is happening in HDFC Bank. So long-term charts also, if you ask me, they really don't inspire too much of confidence. Yeah, but it's more of those who want to maybe spread out and look at from a medium-term perspective to a long-term perspective. So they could start accumulating anywhere between 1300, 1350. Because below 1350, the stock is in for some further weakness towards 1300 levels. But yeah, those are levels where the stock will find very strong support coming in.
All right, and Mr. Singh, we are in the midst of the earnings season. In fact, we are drawing curtains on the December quarter earnings season. But we have a big one today, Hero MotoCorp. Now, Amit, I'll come to you first. What's the street expecting from Hero MotoCorp?
Yes, the company that even has Harley Davidson in its stable now is expected to post a net profit of as much as 47%, led by lower cost of production. Revenue from operations are expected to climb by as much as 21.1% to 9,728 year on year. EBITDA is expected to rise again 47% to 1,361 crores. EBITDA margins are expected to rise 250 basis points. In January, the company sold as many as 4,33,598 units, reflecting a 22% growth compared to the same month last year. Hero clocked domestic sales of 4,20,934 units and exports of 12,664 units in January. Things looking good for the motor major, and the results are expected to reflect that.
All right, and Mr. Singh, what's your take on the stock? A clear outperformer when it comes to the two-wheeler stocks. Hero MotoCorp has delivered phenomenal returns over the last year. Can it, rise further from here on? And what do you particularly like in this space, in this two-wheeler space, sir?
Yeah, I would say in the two-wheeler space, first I'll talk about Hero MotoCorp. This is a stock which is extremely strong on the long-term chart. So one should look at, on any correction, this is a stock which is worth buying. There's no doubt about it. From a medium term, from a long-term perspective, we have seen the stock rally significantly, and from almost 3,000 levels, currently is on 4,800 levels. So we've seen a more than 50% rise in the stock happening, and that also quite fast. So if we go back, so somewhere from November end, the stock has witnessed a breakout and the rallies there. So this is one stock one can definitely look at from a medium term to long term perspective. And the other stock which is of interest is again Bajaj Auto. This stock is also very strong technically. The structure of the stock is very strong. Like I had earlier talked about ICICI Bank or HDFC Bank, there the structure isn't really very inspiring. Here the structure is very strong. Yes, the stocks have rallied, so there is bound to be profit booking. There would be bound to be the stock trading in overheated territory. But effectively, any meaningful correction in the stock is a buying opportunity till the time we don't see a trend change. Because even on the quarterly charts, the stock continues to display very strong momentum and very strong rally. So on some significant correction, one should look at adding the stock. But yes.
Mr. Singh, you mentioned Bajaj Auto, but unlike Bajaj Auto, when I look at Hero MotoCorp, it is not very far from its 52-week high. Is it time to cash out, and would you still advise people to get into this stock at this high price?
No, Hero MotoCorp is someone, if is holding the stock, definitely they should hold the stock. If they ask me about what are the levels, important levels, so the currently some 4,800 levels now. What has happened is that the stock from 11th of January took off. So from 4162 levels, it's around 4830 levels. So the stock has rallied significantly, almost I would say 15% or so rally has happened since within less than a month, which is phenomenal. Having said that, I would say one should definitely hold on to the stock, because till the time they don't see a trend change, because or they can trail their profit. So if the one wants to hold on to the position, so ideally a stop loss has to be below 4,400 levels, because that's a strong support zone, and then they can trail their levels. Otherwise, at current levels, I wouldn't recommend a fresh entry.
All right, and Mr. Singh, before we let you go, this morning BSE PSU index is under pressure. It's down about 3%. What's going on, sir?
So I would say that some of the stocks are witnessing some sort of profit booking there. So I would say it's part of I would say the part of the market dynamics. So I wouldn't read much into it till the time we see a trend change.
All right, that's the view coming in from Mr. Aamar Singh, sir. Great insights from you as always. Thank you for joining us here on First Six, sir.